Hello, listeners. Welcome to the Future of Wealth podcast. I'm Ajay Malhotra, based in the Greater Toronto area, always scrambling to figure out wealth preservation and wealth growth. My background includes sales, startup, founding them, raising capital for them, divesting them, teaching at the University of Toronto, to investing in five major wealth funds, five major venture funds in Canada, in dozens of startups, and supporting the Canada Startup Visa program as a designated organization. With me today is Alban Jerome. Almost everybody knows you here, Alban, but why don't you give our listeners a little bit of introduction?
Thanks, Ajay. I've been kind of about 5 years. I come from India, Bangalore, which is, if anyone knows, the startup capital of the country. So for the better part of the last decade, I have spent working with startups, whether it's helping founders be the best version of themselves using neuroscience techniques that I had worked with one of my early startups, to helping them build great companies, mentoring them, raising capital. And today I work on finding great startups to invest in using Tacenda Capital. And I think the last year and a half, a lot of our efforts have really given us great exits and has got us great awards in the industry, with us being awarded as one of the best investment funds supporting disadvantaged founders 2 years in running.
And Alban, my understanding is that when you were running a program in India, you were one of the largest programs of that particular type in India. And ever since you've come to Canada, you're one of the, I would say, one of the largest writers of checks to early stage startups. And with you being recognized now in the industry with so many awards, how do you see your transition from coming from India to Canada? And what do you think makes you so successful in two very different worlds, the East and the West?
I think it's because I'm very passionate about not just investing in companies, but investing in the right type of companies that bring value. I think I'm not a specialist. I'm a jack of all trades. I started my career actually in event management, and then I went into telecommunications, and I went to neuroscience, and then I worked in learning and development. So I've had the luck of actually seeing so many different industries, right? Because I was in telco and I was in events, I got to work with much more industries than I would have been if I'd taken a very linear path, what most Indians did, which is become an engineer or a doctor or a lawyer. So
And
because
then
of
go
this,
work for the bank, right? Become an engineer, then do an MBA, then go work as a clerk in a bank, right? Or something like that, right? Like a
exactly.
glorified clerk, right? But the job title's that of a regional manager. But what are you doing? I'm just peddling the products, right? So, I mean, that's the traditional route. So that makes your and my background pretty similar, where I've moved through so many different industries myself. I started my life in my career in sales, became really, really good at that, and then realized that while I was so good at it, but I wanted more in life. I wanted to do more in life. Then I branched back into my old love of computer science, became a programmer, worked as a programmer in 4 different countries, did 28 plus projects, then jumped into building startups, growing them, selling them. From there, came to Canada. One of the biggest industries in Canada is real estate. Got into real estate, building homes, selling homes. From there on, realized that one of the things that needs to happen in Canada is funding of startups. And then I jumped into funding startups and giving capital allocations to them, helping build them, helping support them. Meanwhile, I did a small stint as a professor at the University of Toronto, teaching data sciences. So I find a lot of people who have very different things in their background to be very well rounded individuals. They're able to look at things from many different perspectives just because they've got that life experience out in what you do.
Absolutely. And I think that is sometimes often overlooked, right? When I'm talking to founders, I don't like talking to specialists because I feel like they're so myopic in their thought process. I mean, if you look at the best industrialists in the world, I mean, the reason Apple is today what it is because Steve Jobs did so many different jobs before he started this company. Same with any other great entrepreneur, right? Even Warren Buffett, the investments he does is because he did a lot of different jobs early, understanding different industries before he started investing in them. So if you're not exposed to a lot of things, if you're not having those life experiences, Ajay, as you call them, then your ability to look at the world is driven only by what you've studied and what you've learned and what you've been educated in. And I think that is what today is needed, is look at the world on a holistic perspective, look at the different factors that affect it, and that is the only way you're able to predict the future that you want to create.
Do you think that pretty much explains why India lacks innovation to some extent? Like people, whenever I talk about the fact that India lacks innovation, people say, no, 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 we need innovative and this and that. But most corporations that you see, most startups that you see getting to unicorn status in India are pretty much taking something from the world, cheaping it out, right, making it more affordable to the Indian currency, which is the Indian rupee, which everybody wants it to be devalued and keeps falling like a rock, and then starting to sell it to the largest population in the world, and that's how they generate their revenue. But I see very few, if any, of them having a creative edge, having an edge where they've created some innovation, right? Is that what explains it, that most people do not have that much of wealth of diversified experience to be even able to innovate? Because a lot of innovation happens in the immediate intermediate, right? Where you see something in one industry and you go like, oh, but that's not how it's supposed to be, right? It should be like this because I've seen better somewhere else, right? Imagine if you were a sci-fi author or a sci-fi movie producer, right? You would come to take with saying, oh, in the last movie, we anticipated that the future is going to go to this, and let's go ahead and develop that future that we were thinking about.
Exactly. I mean, that's what a lot of good authors do. I don't know if you know this, but the guy who wrote the book Dune, the big movie that came out
Yes,
this year, is
yes.
actually an ecologist.
I love
But
that movie, by the way. I absolutely love that movie.
the book's even better. And he actually wrote it as an initial essay on ecology, on how the environment is not taken care of by us and that in turn will affect us. And suddenly ends up writing a book on leadership and culture and genealogy and whatnot, right? So I think having varied exposure makes sense. And you're right, that has been India's bane. Like, I hate to say this, but once upon a time, India was called the land of clerks. Now it's called the land of engineers. It is that we've got an obsession with mass producing what we think the world wants, not what India needs. We've got great unicorns, don't get me wrong, but they're not unique unicorns, right? They've basically people gone abroad who studied, come back and said, this is not there in India. And because there's a billion of people here, it's a question of volume, a question of scale. What would be a mediocre company, say in New York or California, today in India, just because there's a billion and a half people, you're able to scale it up very, very rapidly. Right? Flipkart wasn't a unique idea. We already had Amazon doing that for years. So was a number of unicorns there. I feel like our innovation is Indian style, but it is unfortunately not pushing the boundaries of technology that we would love to see. Maybe a quarter of a percent at best, but not the way we would love to see for a population of that scale.
Very true, right? I mean, I would say that there's nothing wrong with having a Costa coffee and having this coffee and having that coffee. Copy Starbucks all day long, right? Why not? I mean, that's a viable business model. Starbucks is too expensive anyways for people in India to afford it with the currency going into the gutter.
Yeah.
But what's missing is the 0 to 1 thing that Virathy talks about, where you create a completely new dimension, you create a completely new innovation, and very few of those come across, right? It's not like it's completely absent. Like you get the UPI stack, which is amazing, right? It's amazing innovation, and I wish that more countries adopt it and more countries take it forward. So there's some innovations, but just so tiny, so minuscule as compared to the large population that they got there.
Because a large part of the population is not encouraged to think outside of the lines they're brought up in, right?
Exactly, exactly. You need to think like this, right? So ever since you're young, you get demerit points for anything wrong that you do. And, yeah, it's crazy. It's
Yeah,
crazy. If
I,
you're an innovator, you have to start doing the wrong things, because the right things everybody does, right? That's not innovation.
I agree with you. One of the favorite stories that I have with startups in India is this company called Ether. They make electric scooters. And the story goes that these two kids out of IIT wanted to start that in and they said to the professor, "Hey, can you tell us how to go about doing it? Because we just don't know where to start." He said, "First thing, neither of you know how to run a bike company. Neither of you know how to do anything. And why don't you go for the next 2 years, figure out if this is what you want? And the next 2 years, he made sure they knew the industry before they started. And here's the thing, they're a batch of few hundred students, and there may be like five, six at the premier Indian institutions told to think outside the box, told to go figure out how to do something from people and then come and innovate. Most of them today are happy being a round wheel in a round hole and being very happy about it, but rather than going out there and changing the dynamic, questioning the status quo. And I think that's the saddest part. When you're at the highest of Indian education system, it's less than 2% that's being questioning the world. Then where is the innovation coming from? Like you said, 0 to 1 is where we're stuck at.
Absolutely. So, today we got a full docket, right? We got 10 amazing topics that we want to talk about. And
Mhm.
one of the things we want to talk about is creation of wealth and preservation of wealth and generation of wealth, right? Especially for high net worth individuals, ultra high net worth individuals. You got a lot of clients, I got a lot of clients, and they say, what is next, right? How do I help my capital grow? How do I help my capital push boundaries? How do I help my capital move and work hard? So let's talk a little bit about Tacenda Capital, right? So you are the general partner at Tacenda Capital, and I understand from you that the word Tacenda is all about bringing the hidden to the visible. Do you want to talk a little bit about that and talk about what you're doing?
Absolutely. I think one of the best things about being venture capital or investing in early stage startups is that you're not investing on the company as it is, but what it can do in the next 5 years, next 10 years, or whatever its trajectory of growth is. You're finding the hidden gems. And I think that's been one of our driving factors to look beyond what the traditional industry is investing in, find the fringe companies. Like we've invested years ago in companies that actually had dissolvable injection strips, which meant today kids are not going to be afraid of injections when they're getting vaccinated. I mean, you have kids, Ajay. I'm sure
So it's
it's
like putting a band-aid on, right? So
exactly. Can you imagine
yeah,
taking them for all the injections and then being petrified of the doctors and nurses? Whereas you just now
yes,
take a band-aid, stick it on it. The kid is not even a bit wiser, and they're good. We've also invested in amazing technology that goes beyond what we're doing. Like, for example, one of my favorite inventions is this drone system that actually can explore underwater resources. Today, we've kind of exploited the surface world, for a lack of a better word, but we've not really tapped truly to the potential of the oceans, right? 70% of the earth is covered by water, and we barely explored 5% of it. We probably know more about our solar system than we know about the depths of what's in our oceans.
what's
And
in that?
we've got a handful of companies today that are working there, and I'm happy to say we love finding companies that work in those out in the west, out in the wilderness industries, which are going to change the world.
Absolutely. And I think at this point, we can, without naming the people and without naming the startups, we can talk about the startup that was an underwater defense startup or
Yes.
a needy defense startup that you and I both invested in, and we were trying our level best to bring the startup to Canada because Canada has one of the most exposed coastlines in the world, and people who look at the globe can realize how close it is from Russia and how close it is from China as well. In fact, most of the flights nowadays that are absolutely anti-modal flights, where they go from one edge of the world to the other edge of the world, tend to fly over the North Pole or the South Pole because it's just easier. When planes becoming more reliable, you could go that far off, right?
Exactly, and we're not.
And
And we're talking about the water pathways opening up, right? With the ice melting, literally today shipping time is going to be cut by what, 30% at the very.
yes, yes. And most people do not notice that in case of Canada, it's very unique. These are not international waters. These are coastal waters of Canada because these are within the islands that make up Canada. So huge amount of northern exposure, both from a defense perspective and a resources perspective. And both you and I, along with many other people, were trying to bring this a really great defense company to Canada, but our immigration department had other views on it, and and we feel silly about it because it's so difficult to get these companies. But as part of that, we realized that nobody goes beyond three, 400, 500 meters. In fact, most of the American nuclear submarines cannot go beyond that either. So they don't even make torpedoes that go below 600 meters or so because there's like no point. Nobody can take those pressures. So nobody
Yeah,
goes beyond that. Right? But
absolutely.
at the same time, the depths of the ocean are way beyond that as well. So we've explored so little, and we have so little capability of doing more exploration as well. We've just not generated as much capability.
Matter of fact, it
It
is said if
just
you just look at the Atlantic Ocean, you have these little volcanoes, which are basically islands today. Just at the base of these underwater mountains, there is enough gold and titanium, and there are so many resources in pellets form, not even like buried and lost in the rock, but literally in scavageable quantities that we've not able to touch because we've not pushed the boundaries so far. Like I said, we know more about
yes.
our solar system than what is in the depths of our oceans today.
Yes, very true, very true. So, Albert, let's come back to a little bit about Tacenda. So, your goal for Tacenda is taking stuff that's usually private and bringing it public. And my understanding is that the public markets are so overpriced at this point. You know, everybody knows that the markets are touching new highs and new highs, while at the same time, there are more and more companies that are staying private for longer. So there's very little product or companies getting public. And we realize that it's so bad that a lot of these companies are trading at a price earnings ratio of 50, 100, while at the same time, we know that an average S&P 500 company gets pushed off the index and perhaps gets delisted and goes bankrupt in an average of 16 years. So you're paying 50 multiple, 30 multiple. I think the average multiple today on the market is about 32 or 34. So you're paying a lot more for a public company. So if somebody was to really run the Warren Buffett method, right? Buy it, hold it, and just earn dividends out of it, it's a fool's errand because you're going to be paying 50x for something that has the probability of going bankrupt in 16 years or 18 years. And thereby you will most likely end up losing your money. And that's why I think Warren Buffett's job is very difficult because he has to very carefully select those companies.
Absolutely. I think a lot of people don't know how the market works. And mainly because of the fact, like you said, these factors are so complex that they are outside the grasp. So what do? Is they find people influencers. They look at Warren Buffett, they look at other people in the industry whose name is recognizable, and they say, okay, if A is doing this, I will do what A does. So this creates these massive, uh, lack of a better word, herd mentality, and that's where a lot of these numbers are going. Like if you noticed in the last few weeks, not just in the regulated assets, that is your stock market, but also the cryptocurrency, there's been a massive surge because suddenly Trump's potential appointees, even before they've been confirmed by the Senate, they all have said, oh, we own cryptocurrency. So everybody's just been buying crypto without truly understanding how the crypto market works. I remember having a conversation with someone, an accountant who recently said, hey, listen, the only time I'm going to invest in crypto is once they're regulated. I'm like, do you realize the entire premise of how crypto, Bitcoin came in was to be against being regulated, something that had to be deregularized, right? So people are actually following these trends, following these industries, but not really understanding what factors are at play here. And I think that's often the challenges why the market is so turbulent in the last few months. It's just influencers spiking on marketing and then people following that and the numbers reflecting that.
Very true. Very true. In fact, that's why Elon Musk kind of completely repeats himself all the time, saying first principles thinking, because most people end up just not being able to think, right? Like it's difficult, right? I understand too, because you need a lot of time to absorb all that content, and then you need a lot of time to reflect on that content, and you need a lot of good people around you who can, question your assumptions, and then is when you develop that ability to do first principles thinking. So it's a very very difficult job to do. But on the
Absolutely.
Trump
But
on the Trump topic, so we, as part of our agenda for the conversation today, was a lot of things around Trump and Trump's trade wars and how it's going to affect Canada. So let's jump into that segment a little bit.
Absolutely.
What do you think is, is looking like the future of United States and Canada in global markets with the new Trump presidency?
Well, Trump strongly believes in make local, sell local, which is, I think, a big boost to North American manufacturing, which has, for a lack of a better word, really, really stagnated. I mean, if you remember the reports from the last 3, 4 years, we had tons of shipping containers marooned in Canada and North America because everything was being imported into the country as finished goods, but nothing was being manufactured here, which meant the cost of purchase, the cost of the economy was critical. So I feel like the next 12 months to 18 months before the midterms, he's going to be making massive strides on building infrastructure, building manufacturing, because one, that kind of solidifies his power. Second, he's been a big proponent of make American manufacturing strong. And I think that's where he is also going to be pushing against Canadian imports and stuff as a way to, for lack of a better word, strengthen his home base, right? Because his home base basically likes to make America dead center of their entire motivation. So there's going to be a lot more jobs being created in manufacturing, jobs being created within America, and I think that will be a ripple effect to Canada as well. Because in the last few years, Canadian immigration has brought in great people, but we haven't created sustainable jobs. And in many industries, people are actually retiring. I don't know if you know about the statistic, but I read somewhere over 35% of the population in the age group of, sorry, not in the age group, in the senior management position will be retiring in the next 5 years or less, which means there's going to be a massive leadership vacuum. And if you don't have a proper pipeline built in, where are people going to go to, right? And most of these leadership people are the ones who own their own business, which means when they retire, the jobs don't just get passed on to someone, they have to either be sold or shut down.
Okay. Okay.
So I think those are
So
dangers that are ahead. And I think people who are smart enough to see it are making plans to move into those industries by creating new options.
And what do you think about all the artificial intelligence that's coming in? And so, Trump has three major issues around him, right?
Okay.
Number one, he has to figure out that technology always leads to a lot of eradication of jobs. So he has to keep creating those jobs, right? And he's trying to create jobs in older industries,
Mm-hmm.
right? So my perception here, and bear with me for a little bit, if today I try to create jobs in farming, I'm not going to be able to. It's automated, right?
Yeah.
A lot of it. So what Trump is trying to do is he's saying bring manufacturing back into the United States. But
Yes.
with his good friend Elon releasing the Optimus robot, how is he going to bring manufacturing? I mean, more and more would be automation and robotics, right? So that's my issue number one with him, right? Like he's trying to create the old school jobs, not the new school jobs. The new era jobs or the new school jobs are in innovation, and that requires retuning America's legal system because the whole patent system is full of scams and frauds. Everybody in America knows you need less money for the engineers, you need more money for the lawyers.
Mm-hmm.
Okay, so that's something that's not getting fixed. Versus the closest competitor, China, is saying, what, don't worry about patents, just keep producing, right?
Yeah.
So that's one big thing, that creating old economy jobs rather than new economy jobs. Number two, I find that there's a lot of conflict, right? He hasn't come to power, but already there's an issue with Canada. He's making Canadian currency drop. So at the end of the day, world will stop loving him, right? Like because he's hurting more than he's helping everybody else, right? That's the second issue that I find. The third major issue that I find is that the true problem with America is that the metric for efficiency
Mm-hmm.
is their own currency,
Okay.
right? So they say, oh, we're more productive as Americans. What are you more productive in? We're more productive in US dollars, right? Versus US dollar itself is such an inflated measure
Yeah.
or a yardstick to measure the case. Because, I always tell people that my father-in-law got his open heart surgery in India. And at the very same time, I had a really dear friend who was in the United States and he was getting open heart surgery. They both had exactly the same operations. One paid 250,000 INR for a good hospital.
Hmm.
The other one paid almost $500,000 in the United States, right? So by any magnitude, the cost for the United States was 100x the cost that was in India. So how do you measure productivity if the yardstick itself is a little bit, off measure, right? So so that's my third kind of challenge, that the yardstick is off measure. What's allowing them to keep the yardstick off measure is the fact that they can produce their currency in unlimited amounts, and nobody else is able to say anything about it, is because they got the biggest stick in town, right? But he's now coming as a president in an era where his biggest stick in town is no longer the biggest stick. Everybody now knows that literally for the last 40 years, most of the wars that America engaged in were the wars they lost.
Hmm.
That does not by any means that Canada can stand up against America or Argentina can stand up against America, right? They still have a very, very powerful military. But the fact is that they don't have a military that can go head to head against even Afghanistan and control that country. So, they have like if I was a betting person, I would say their odds of going head to head against Russia and winning, or going head to head against India and winning, or going head to head against China and winning, are going to be very slim to none, right? Like I wouldn't say they can't inflict a lot of damage, but really winning and coming up ahead would
It's kind
be
of funny you
so.
should use that phrase. They can inflict a lot of damage, but they can't really win the war. Because the reason they can't win these wars, they all pick to fight, is that they're not fighting against an established army, right? They're fighting against insurgents who don't have uniforms, who look just as the same as civilians. And unfortunately, the American doctrine of war has not adapted to meeting this new battlefield, right? That's why today, if you look at it, and I hate to say it, America rather fights more proxy wars than actual wars where they put
That's
boots on.
true.
Because end of the day, they've also realized that I can't tell the difference between this guy and that guy because they look alike to me. But if I trust this guy, I can give him enough money to shoot the other guy and trust that he doesn't turn around and shoot me, right? And that's how they've been, I think, trying to mitigate their lack of adapting to the new battlefield. Uh, Now, going back to the three things that you said, Ajay, so that I don't, dilute myself talking about war and combat and whatnot, is that you're right. I mean, the most modest numbers say it's a 12 to 13% overvaluation of the dollar at any given point of time in the last 2 years alone, which means the only reason America can enforce that power is because of its bases. Today, it has one of the, it might not be the most successful army in the world, but it's got the most bases in most parts of the world. One of the biggest exports that America actually does and is actually paying for naval bases, paying for air force bases across the world. I think they have more bases outside of their geography than they have inside of their own geography at this given point of time, which is the only reason why they're able to project that power. And for Trump, I think the reason he only talks about established industries, and this is my theory, I could be wrong, is that he does understand only that because that's the industries he grew up with, right? He has not really dabbled with the new age technology. And that's largely a factor not of Trump, but of decades of poor American planning in education. I have family members who have worked in the US education system, and I know upfront that what they teach, the methodology that they teach, is decades behind, and worse, it's billions of dollars underfunded. Like where you have underpaid teachers trying to teach kids on outdated textbooks and knowledge, which means
Yes.
it's sad to say
Yes.
a lot of Americans probably can't identify Australia on the map.
Yes, very true, very true. In fact, it's surprisingly so inefficient to do anything in America at this point that Elon Musk famously talks about the fact that they spent 2 point some billion dollars and for the rapid transit train system
Okay.
and or high speed rail system in California. and they built only 1,600 feet of concrete. Right? He's like, they didn't even have put any wells there, right? It's just 1,600 feet of concrete. And versus, Saudi Arabia just launched their metro station, 83 stations, uh, beautifully built, state of the art for $2.7 billion, right? So they've taken their most populous capital city of Riyadh. They've put a massive metro station all over the place, world class, beautiful locations, beautiful terminals, for the same money that California built 1,600 feet of concrete with no rails on it. So at that level of slowness, at that level of inefficiency, I think what Donald Trump will try his level best to reinvigorate the economy, to fix things that are broken. But I think what's broken is way deeper, in my opinion. And then yeah, and the public markets, coming back to public markets versus private markets, the public markets are inflated further with the optimism that comes with Trump. So I think thereby coming to your view that to be able to make your capital work long term, it's better to stay private. It's better to privately own businesses where you can own them at, as you mentioned, 4%, 4 or 5 PE is what private businesses you look at owning for dividend and revenue growth, versus public markets are doing 30 plus PE. So you get a 6x advantage only private businesses that can produce revenue.
That is very true. But again, a lot of times it's a question of knowing who to trust, right? In this space, you've been here and you've seen a lot of these companies come and go, and a lot of time it is about the market buzz, right? It's the notion that if someone's loud, if someone's bright, if someone looks shiny, they're doing great. But a lot of people do not know how to look beyond the veneer of the marketing brands and whatnot to see if they're effective or not. So, as someone who's been in the space, what do you think they should look for? If someone is saying, "Hey, if I'm working with this particular money manager with wealth management, what are the things that I need to look at them?" That is not marketing, that is not social media influence, but rather that actually is the meat and bones of the business.
Yes, yes. And that's probably why people reach out to you. And that's probably why high net worth individuals reach out to you and say, could you make my money work for me? Right. And I think everybody who's high net worth needs to kind of compensate for inflation. Right. And in our previous discussions, things have come up where, we've both cited the fact that consumer price index or CPI, which is what the central bank measures it at, is, officially it went to 9% and then came down to 3 to 4%. But unofficially, we know that house prices have gone 4x in the GTA, and now thankfully they're coming down a little bit, which we talked about, and we predicted that sometime back with huge amount of precision that they're coming down, but still they went up 4x over the last, 7 years, 8 years of Trudeau, right? So right before Trudeau came in, things, you could get a good house for $500,000 and or 600,000, and now you can't touch anything below 2 million.
I'm talking about condos, you're talking about houses, right? Literally, the comparisons are just unbearably sad because we brought in so many millions of people, but we don't have enough houses to house half of them. It's just atrocious. And I think when do you think the course correction is going to happen? I feel like it's going to take another 2 to 3 years before things become sane again. What is your read on that?
Which is the same cycle, right? I mean, we know the real estate cycle. You can play 3 times in your life. So, and that's where we kind of help, the LPs associated with you, where we talk through these things and we go in and say, we know this because we studied history. We know this because this is how it pans out. We know it because we all talk about it every day, and we like to kind of invest our time and effort into it. You play that 3 to 4 times in your life. America has the 30-year cycle. Canada extends the cycle usually to about 40 years. 1989 was when the last recession happened in Canada in real estate. Real estate recessions always follow a very predictable pattern. If you know, then it leads to a decline. Then in US, you track the Case-Shiller index. Usually leads to a decline to 5 to 6, 7 years, sometimes up to 10 years. And then from there on, it's an upswing. for another 20, 25 years, right? Depending on also the pattern for that particular country is. So we know that the peak of real estate in Canada was literally February 2021, I would say, right?
That
Uh,
almost more than 2 decades ago at this point, right?
2 years ago, sorry. Yeah,
You said
yeah.
2022. Sorry, you said
2021.
my bad. Okay.
Yeah, 2021. And that was the peak. And then from there on, it's been a downhill slide from there on. And so if you assume, between 5 and 7 years, between 5 and 10 years, so you assume something like 7 years of downward progression in prices. So from 2021 to 7 years would be Feb 2028 would be when the prices hit the bottom. And you would know that, right? Like people who are in the market would get a feel for it, right? And once that happens is when we would recommend our investors to take some capital and invest. But that's usually not the right time to invest either, because then it goes through, as per the wave patterns, it will go through a little bit of correction, then slow growth. The time to kind of key invest in real estate is when the last kind of hyperbolic swing is there, because then you will make more out of real estate than you would make out of under any other asset class. So the way to make your money work is to go ahead and rotate between asset classes and know, okay, now I know I'm going to get a crypto upswing. Now after this, I know that I'm going to have a downswing in markets. How do I want to play this? Do I play this by going big on gold, which is a safe asset? Do I want to be with a hedge fund that is on the short side and is actually shorting futures to go ahead and bring some value to the table? So, those are the perspectives, right? But you always have to rotate, right? You have to have a rotation model built in, because not everything's going at the same time and not everything's going down at the same time, right?
Absolutely. You can't put all your eggs
So
in the basket. You have to find a way to diversify. And you said it's sometimes not a question of just choosing what is right now, but also being able to predict successfully what's the next thing to get in. And if you're not getting in at the beginning of the of the growth curve, then you are basically, I hate to say it, going to be the bag holders.
you have been about in this yes. Now let's talk a little bit about inflation, right? Over a long period of time, like obscenely long period of time, let's take 40, 50 years, or any one person's lifetime. What do you think is the rate of inflation that people should keep in mind, right? Some kind of a round number that they should keep in mind, which you believe is the true inflation, right? I sometimes I'm like amazed when I look at history and I realize a really good house in downtown Toronto used to be $10,000 in 1950s and 60s,
Wow.
right? And right, and 10,000, 11,000, 12,000 was like premium luxury house, right? So that was the pricing of homes. And the first time I looked at that was when I was actually buying a house in downtown Ottawa to demolish and rebuild. And I realized that the last time that house was sold was 1956. And I looked at the price that it was sold, and I was like, no, there has to be a zero issue somewhere. It's missing a zero. And I realized, no, it's not missing a zero. Those used to be the prices back then. And from there on, I started doing more research and realized that inflation's so strong. We don't see it day after day. We don't see it week after week. If you compare year after year, or 5 years after 5 years, you notice how much it is, right? It's crazy. Um, and so what's your thought? What would be a round number that you would tell your LPs or the listeners out there to say, this is what you should keep in mind in terms of inflation, and you should make your money work at least that much?
I think what is it, 12% now is the considered the same number, but I think anyone who's in trying to, so I want to look at inflation as two parts, right? Not just what we want to look for today, but in the next 5 to 10 years. I know everyone's talking about Trump coming and the inflation numbers dropping to 5 to 6%, but I feel like we need to plan for an inflation of at least 10 to 12% in the next 3 to 4 years, because there's a lot of things that's changing. You rightly pointed out, right? Now we're having robotics and all of that stuff coming in, which means traditional job industries are going to crash, which means there's going to be huge, hate to say it, bloodbath with massive automations that were once considered impossible actually coming into play now, which means you need to start looking at 12% to 15% if you really want to make your money work for you the next 5 to 10 years. Otherwise,
Absolutely.
you're basically going to end up with break even if you're lucky. If not, end up losing money actually at the end of the cycle.
Absolutely. Absolutely. I wish, and I hope that it brings, like, we've gone through an inflationary phase where the population was increasing
Hmm.
and goods and services were not as ample, and that led to inflation. I just hope that we go through now, the world goes through the inflationary stage where with robotics and with AI, goods and services are more than ample,
Hmm.
and at the same time, we know that population is decreasing, where we know that Japan has a negative growth rate, South Korea has a negative growth rate. So with decreasing population and with ample goods and services, that we probably go through a much longer cycle where it was inflationary in nature and now starts becoming deflationary. But that's my hope and prayer. But I agree to your point. Like, I also keep a 10 to 12% inflation in mind, and especially looking at housing pricing, houses, price of houses, it definitely seems to be about 12 to 15% per annum. So something to keep in mind. So, Adam, these are great segments. Let's talk a little bit about a portfolio allocation strategy. So when people come to Tacenda Capital and your limited partners work with you and they invest in you, now, apart from just buying private companies and investing in private companies, do you have an investment model with which you can talk about, that you can talk about openly in how you take capital from people and how you invest capital?
I was going to say, what am I allowed to say publicly? Because a lot of private equity or a lot of investments that we do is designed to be a formula that uh, uh, is a dirty secret, right? We don't like to tell people about how we do it, but our strategy is basically 40% in private equity. We want to focus on businesses that have strong fundamentals, right? A strong core technology, something that can weather the storm and actually grow forward.
The
Then
moats around the business that
100%.
everybody talks about. Yeah. Okay.
Without a moat, your business is dead. Like today, it is so easy to copy and replicate. If you don't come to the table with a moat already built in, you're asking to be taken over or wiped out by a stronger competitor. The other
Gotcha.
30%
Understood. Yeah.
that we invest in is in private real estate. This kind of ensures that we have a steady cash flow, that there is, momentum in our books. There's always, some kind of cash flow happening. And we play around in the public markets about 20%, which is basically a way for us to look for undervalued companies. There's a lot more undervaluation than people realize because everybody, like I said, follows the popularity model where everybody follows what the trendsetters are doing. And they're not looking at a lot of undervalued companies where we are playing with. And the last one is where we kind of go for the speculative ventures where we aim for oversized returns. We
which
also
is your which is your venture capital arm, right? Where you
exactly.
write a lot of checks to these startup companies, very early stage. So you potentially get the 100x or 10,000x there.
Exactly. That's basically the long game that you have to play for. And I think we've been lucky that we are able to have a decent deal flow of some great companies. So we're able to spread the risk a bit and at the same time spread it across wide sectors. We've supported over 40, 50 startups in the last few years alone, which means even if a good majority of them will fail, startups is not a high success turnout, but at
But
least
you have a very high success rate too. I mean, you had 4 startups that you exited just in the last 1 year, and so you end up
we're
making
above
quite a lot
industry
of
market.
sales.
Yeah,
Yeah,
we are
you're
above
about
industry
investor.
average. I'm not saying no on that, but I think you can't always, sit back on your laurels and assume that that's how the factor is going to work because we don't control these factors, but we are better than the industry average. And we always work on the long game. We try to find companies that uh, can exit fast, that grow fast, exit fast, and then we're able to get our returns at pretty outsized returns.
Fabulous, fabulous. Now, you talked a little bit about global, so let's get into a segment where we do talk about, are you looking at outside Canada, and what's your kind of like global view of what markets are now ripe for investment? Is all investment going to be in Canada and probably some focus on the United States?
No, not
Or
necessarily. I think
okay,
we
good.
we are diversifying. Over the last few years, we've been exploring and building strong relationships in the Middle East. In South America,
Ian,
we
you've taken a few trips to Middle East as well, like recently, yeah.
exactly. And I really think the beauty of those countries is that they have great appetite for technology and appetite for growth that we are now just seeing the surface of what's happening. Then there's, of course, the old haunts, China, Russia, which for traditional reasons, right? You can't overlook these markets. They're hungry for growth. They're hungry. They're in a always win or die mindset. And those are the markets I think we want to get into the next 2, 3 years. I think there's a lot of overlooked great talent in Latin America that I think we are tapping into. Matter of fact, I was talking to a couple of lawyers in Brazil a couple of weeks ago, and they were talking about actually bringing a lot of these startups here to North America. And the funny thing, their biggest challenge is not capital, it's the language barrier. They're like,
Yeah,
hey,
yeah.
we need investors in North America. We can bring those companies, we can fund them. It's just our guys speak Portuguese. You guys don't speak Portuguese. So my biggest challenge is to bring bridge this gap and find a way to, benefit from it. We've definitely see these as great investment landscapes. They're often overlooked. The BRIC countries, you should never underwrite them off. There's great potential
So,
there.
on the topic of BRICS countries, what do you think about the Indian market, especially when all the regulatory issues or the legal issues that Adani's been facing off lately, and that made their stock drop like a rock and the market drop a little bit?
Yeah, it's true. They did go through a bit of a rough period, but at the end of the day, if you think about it, it is a bit of course correction. They had an exceptional growth numbers for the last few years. So somewhere you have to course correct a bit, and I think it's just minor bumps in the road. They control, if I'm not wrong, a large number of the ports and manufacturing in country. So end of the day, they're not having a downfall, or they're just having a balancing of the books, if you can call it that. And right now, if I understand, they've also made some substantial forays into managing ports in Africa. So they're not
Yes,
just
yes, they are taking over port management in a lot of locations. And even Sri
exactly,
Lanka, right? Like they had the strength to say, but we won't deal. And that deal was beneficial to the United States. And with the view that the United States is taking on us, we're not no longer going to do that deal now.
exactly. And I know this is a strategy that's not often spoken about India, but what India does great, it does a lot of outsourced labor, which all
Yes.
basically means there's a good chance there's a bunch of critical global infrastructure that's managed out of India. Now, what Adani is doing is basically flexing the similar infrastructure support in physical space. So yes, their prices are fluctuating up and down. I think they're going to go through a period of course correction, but I feel like that's only part of them probably restructuring as they expand now beyond the Indian borders, right? Till now, a lot of that brand name didn't really have any value outside of India. Now they're coming elsewhere, and there's a lot of interest in capital. There's a lot of interest in people trying to exist fast. So there's a lot of course correction, but I feel like that's just a bump on the road. Uh, I think they're actually trying to take over, if I'm not wrong, a couple of ports in Europe as well.
Yeah, yeah, they do very good. And thank you, Albert. Thank you for bringing all of this information to our viewers. I think your ability to look at a broad global horizon as well as find those niche investment opportunities is, I think, what keeps your returns so high. This is what brings a method to your goals. And thank you so much for sharing it with all our listeners and all our viewers today. Our mission, guys, here is very simple. We want to have these conversations with you on a very routine basis to provide an opportunity for everybody to be rich. Not just in wealth, but in freedom that comes along with the wealth. Wealth creation should not be an elite club, which only few people know about and only few people have access to. But with the likes of Tacenda, that should be more brought into the public eye and given that particular key information over to each and every one of you, so that one, you can make your money work hard for you, right? So it shouldn't be just you working hard to make money, but your money working hard for you. And I hope that all of this leads to a society of ample resources, opportunities, and security. Uh, Thank you so much, Alban, today for this discussion. And let's aim to have you carried over, if possible, to another session soon, where we deep dive into your allocation, cryptocurrencies, gold. Let us know if sometimes suitable, and and also provide some of that experience to our listeners and viewers.
Absolutely, Ajay, and thank you so much for having me on this call. It's always lovely to talk shop with you, especially since that you see things a lot from a different perspective than I do, right? Because your frame of reference is a lot more uh, intuitive in terms of how technology works, and a lot of things that I feel like we don't speak enough about, right? These first principles, and I think it's going to be exciting. And I feel we should do a lot more of these, like you said, just to bring knowledge and information to the bigger masses, because it's a closed group network for a long time, and that's why wealth has not really distributed beyond the top 2%.
Yeah, it's usually the 1-2% that ends up aggregating all of that, just because they have the knowledge, the other don't have the knowledge, right? So if only few people know how to create a flame or a light, then they will have light around them, that you will be in darkness. So yeah, no, thank you, Agan. This is phenomenal, and that's our goal, everybody. And so wonderful for you and your presence here today, Alvin. And let's aim to schedule another one with your team, and let's make that happen.
Absolutely, Ajay. It was lovely talking to you, and to everybody listening, have a fabulous day, and take care, everybody.
Thank you, everyone, for joining us. Bye for now.
Bye bye.